Hello everyone. Welcome to your Nano Learning course. Thank you for choosing MYCPE ONE as your partner for continuing education.
To avail your credit certificate, it is required for you to complete the entire video. Please do not fast forward the video. Otherwise, the system won't be able to capture your watch time. If you cannot go through the entire video in one go, you can always come back later and pick up from where you left off. To access the final quiz, you'll need to watch the entire video.
To earn your certificate, you must achieve a perfect score of 100% on the final quiz.
The handout material is available for download in the designated section. If you have any technical questions, feel free to email us at support@mycpe.com.
Happy learning and thank you for choosing MYCPE ONE.
Hello and welcome to another roundup of some top accounting stories over the last few weeks. My name is Jason Dynison, Enrolled Agent. I'm a frequent presenter here at MyCPE and am happy to be here leading the discussion of some of these articles about recent news and trends in the accounting industry. So let's start with a discussion of PricewaterhouseCoopers, PwC, one of the big four, leaving a number of countries, mainly in Africa. And we'll get into this in the article, but they've had some problems in recent years with several scandals in a number of different countries. This is a big company. By the way, somewhere in this article here, right here, built over centuries. Did you know that PricewaterhouseCoopers started in 1849? Now, that's not what they were known as back in 1849. There have been mergers and such through the years, but that's where you could trace the beginnings of the company back to. So it's a long, long time that they've been in existence. $53 billion in global revenue. They employ 328,000 people in 152 countries, although that 152 countries apparently is going to be dropping. Now, they've had some problems in recent years. In China, there's the Evergrande fraud issue. And actually, let's pull up another article here. This is from back in August. A 6-month ban in China because of a faulty audit of a company called Evergrande. And basically, this is a company that had an $80 billion problem on its financials. And so the China Securities Regulatory Commission uncovered this and found that PwC gave a clean audit, even though there was this big problem on the company's books. There is also a problem on an audit in the UK that led to a $6 million fine and then a second fine later. Problem in Saudi Arabia. All of this was in 2024. In 2023 in Australia, a partner misused confidential government information that led to overhauls with leadership and the sale of the company's government services unit in Australia. And PwC Israel got hit with a fine by the PCAOB for training exam misconduct. So now it's come out that the company is leaving several countries, over a dozen, a lot of them in Africa, Ivory Coast, Senegal, Cameroon, on the screen here, the countries. And so, what does all of this mean with the big four getting fined and pulling out of several countries? And we also have a story of a different big four firm that's lost a lot of revenue because of cuts to government contracts. rise in regionals. Smaller firms big enough to take on quite a few different things, but small enough to be more agile, may step into the gap. There could be more regulations. In the US, we assume that there's going to be a cut in regulations with the current administration, but that doesn't mean that that will happen globally. How to use artificial intelligence, how much happens with layoffs, and maybe a focus on core markets instead. Another company facing problems, and this is in the UK, is EY, a $4.9 million fine relating to an audit of the British travel brand called Thomas Cook. Now, this company collapsed in 2019, and now EY is having problems because the British government says that the company messed up audits in 2017 and 2018 leading up to the collapse of this company, and that there was too cozy of a relationship between the company and CFO, and basically it led to a loss of objectivity. So, always, if you're in anything involving audit and assurance, audits, reviews, even compilations, independence, proper documentation, and, the screws could be turned on more regulations to keep these things from happening again. All right, so there's this company that has hired auditors after it was alleged that the company misstated, inflated revenue. So this is a company called Builder.ai, and Microsoft and others are among their backers, and they've taken in hundreds of millions of dollars in fundraising through the years, venture capital. But the company has admitted that its 2023 sales were overstated by $140 million, which is about 20%. And what former employees have said is that they counted revenue from deals that either were not finalized. And what happened is the company said that the former employees of the company said that the company overstated sales by up to 20% by counting revenue from deals that either were not finalized or couldn't be collected. And the CEO of the company didn't deny that. He even said that they do have problems. And he says any organization that says everything is hunky-dory is probably lying. And so this is something where investors have a problem when things like this happen. So now BDO has been brought in to do an audit of 2023 and 2024 to make sure everything is above board. The audit is expected, or audits, I guess, 2 years of audits are expected to be released this summer. This is a story about crypto and an accounting shift that led to a $5 billion loss for Michael Saylor's company called Strategy Inc., formerly known as MicroStrategy. So the company is now accounting for its Bitcoin holdings in a different way, which has led to a $5.9 billion unrealized, so like a paper loss in 2025. And basically what it has to do with is classifying crypto as intangible assets that were not marked up or down, but now marked to market is the accounting method based on a shift in how to account for crypto from FASB. And so that led to this basically writing down of the value of that crypto that the company holds. 5.9 billion is the unrealized loss. Now, as it says in the story, though, there's also a $13 billion increase in retained earnings because of prior gains that were previously not shown under that old method of accounting. Just a few other notes here on some tax reform things. Nothing has happened yet, but some of the proposals that are out there. So the Trump administration during the presidential campaign floated a no income tax on tips or overtime. And nothing has happened with that, but that is a proposal that's still out there. There's also been discussion from the Treasury Secretary about eliminating taxes on Social Security payments, eliminating or reducing taxes. So right now, up to 85% of Social Security benefit could be taxed. It depends on someone's income. Taxation of Social Security ranges from 0 on up to 85%. There's also been a proposal that Donald Trump has expressed support for to allow people to deduct car loan interest or auto loan interest. And it seems like this would be an itemized deduction for people with auto loans. Although it's a little bit unclear of who really would this apply to and where would you take the deduction. But it's something that's been floated. Another thing that's been surprising to me is that some Republicans who are usually known for cutting taxes have actually pressed for the creation of a new tax bracket for people earning $1 million or more. Again, none of this is official. None of this is policy. It's all just stuff that people have talked about. And remember, the Tax Cuts and Jobs Act expires at the end of this year. So either, well, what could happen is, I guess, TCJA expires and then we roll back to what tax law was in 2017. I've predicted myself that TCJA will be extended. They'll kick the can a few more years down the road. But most of my political predictions have been wrong over the last 10 years, so we'll see. Another thing that's been talked about is municipal bonds. And with municipal bonds are state and local bonds. And when someone buys a state or local bond, it pays interest, and that interest is not taxable on the federal tax return. And that's how it's been ever since the tax code started in 1913. But there has been talk of either eliminating that exemption altogether and making it taxable, or changing how it works and putting some limits in place on people who had municipal bond interest. And one last story to tell you about. Deloitte has taken a big hit with the Doge cuts. They've had 129 federal contracts canceled for consulting, costing them $372 million, plus they lost an IT contract with the IRS for $1.9 billion. So that's a big, big cut. and we don't know how this will shake out. With now Elon Musk saying he's going to step back from Doge, but Doge is still going to be there and he'll still be involved at least a little bit. How will all of this shake out, and how will companies change how they do business? Yet another thing to watch. So that's a roundup of some recent accounting stories on MyCPE. Thanks for joining us, and catch us next time.